Good evening, everybody. All right. I just spent the weekend in Las Vegas. An expensive weekend in Las Vegas. I'm surprised Caesar's Palace stock is going down after I've been there. I apparently wasn't at the expo. I came in Friday, and I guess by that time the expo was over. But there was an all-day Saturday and all-day Sunday session with speakers. So we had a good number of people there for the speaking. Plus there was Steve Primo there, Mark Sebastian. Oh, I didn't see Chuck Hughes, but I did see the casino floor. I did see my wallet just empty right out. All right. Tonight we're just going to kind of analyze the chart patterns that are working well. So as we can see in the market, we have the prospect for a J-hook pattern, which would take us up here to the 200-day moving average. So we'll actually get there. You won $4. I had a few big wins, but I think all that did was keep me at the machines longer. Okay, Ed. So anyways, here's our analytical prospects is that if this is wave one, wave three should take us up at least to the 200-day moving average. However, on the other hand, we're in the overbought area, and we did kind of a doji hanging man today. So that normally wouldn't be a major concern because it would still tell us we're probably in an uptrend. However, when you add the analysis of the NASDAQ, it basically touched the 200-day moving average, which was its first target. So now we've got a different scenario that starts coming into our analysis. First of all, we're right back up here where it topped out before with a shooting star. We just touched the 200. We're still in wave three of a J-hook pattern. And notice kind of the bobble here. Took us up to our next target. So now the analysis becomes either they're going to take it through the 200, obvious, or they're going to fail. If we wake up tomorrow and see the pre-market futures are down, that pretty much tells us we might be at another bobble at the 200 on the NASDAQ, which would also tell us that the hanging man on the S&P 500 and the Dow, if they're confirming, we're going to have to expect there's going to be at least a day of selling taking you back to the T-line. So with that in mind, that sets up things for either if you've got short positions in the portfolio, you want to see them working well on a pullback day, and any longs that you have in the portfolio, they better stay up pretty strong if there's going to be a market pullback. So it just kind of gives you a better feel or more analysis detail as far as which stocks should I be coming out of and which stocks should I be staying in based on how this market opens tomorrow and how those individual stocks looked. So that was on the NASDAQ. No, a spinning top, you can tell this is more like a spinning top where the tails are more significant. The tails aren't really significant here. That's still just kind of a bullish day. But the top price just barely got to the 200-day moving average. Let's see. So some of the other things in the commodity world is oil prices. Notice when the oil prices got back up, and this is why these signals become more important at important technical levels. Right about the same level that it topped out before, but in this case, they failed at the 50. But they got right back up to that price and they failed again. And how did they do it? With an evening star signal. Then they tried to bring it back up. And I say try, because notice the lack of conviction when they had some dojis here and tried to take it up. And then when they slammed it today, that basically tells us. It told us that this pattern was still in progress as long as they can't close it up above the T-line. Now, wasn't that a close above the T-line? Yes, but I would have wanted to see them traded positive today to tell me they were taking it up. And I definitely wouldn't want to see them bring it back down through this level, because that would have told me they're still heading in the wrong direction. So crude oil is trying to head higher. Now, it looks like it's opened a little bit positive. This is where you have to kind of watch your intraday charts. It closed right about here, and this was after the, I guess the outcry. This was the electronic trading. So actually, it's down, or just down slightly from where it should have closed. So sometimes you have to watch, make sure that you're not getting a false reading, in the sense that even though it looks like it's open positive, it actually closed right about that level. They add the after hours trading to that. Some of the other commodities, cocoa, can be bought. I mean, there's kind of your bobble at the 50. So that's pretty much telling you there's going to be some more upside in cocoa. And if you go back, so when we're looking at a chart, notice that this uptrend started with the inverted hammer, spinning top. You had a bunch of dojis over here, and then a very convincing day up through the T-line. Once they got through the T-line and did the bobble, notice what they couldn't do. They really couldn't close this below the T-line. So this one's probably a very good buy. And so if it's a good buy here, where could it go to? Well, what type of trending has it done prior to this? Well, as we go to our longer term chart, we can pretty much draw a line right here through the bottoms. That's telling us that's where the support is. So where's our next target? I can do this, make this a little bit easier to see. It's pretty much the support area. So where would our obvious resistance area be? Somewhere in this area. So is that a worthwhile trade? Definitely on a commodity trade. And we got out of coffee. I think we got it out the other day, because notice what was happening up here in the overbought area. When you start seeing those dojis up here, remember, a doji means indecision. A series of dojis means greater indecision. And when they opened it down here and started trading it down, that told us pretty much what the decision was. I didn't short it in time. Traveling. Oh, what was another indication that this was a toppy area? Once again, you could take your trend, pretty much draw a line right down here through the tops. That's what everybody else is watching. Or you don't have to be a very sophisticated analyst to see, all right, there's a trend line through there, and where could it go to? Your parallel trend channel, bringing it down into this area. So that'll probably be readdressed tomorrow as far as coffee on the short side. Whoops, tomorrow is Tuesday already. Time sure flies when you're having fun. Okay. Coffee, the dollar. What type of signal did we have in the dollar, or pattern I have in the dollar? Oh, there was your bullish Harami in the oversold area. Then there's our doji sandwich that brought us back up through the T-line. So what's our next likely target? Well, I'd pick out one of these areas, and that would make for a few days of a worthwhile long position in the dollar. Gold, on the other hand, we can see what happened once it got back up here to the 200. Remember analysis that once they break through a resistance level, they'll come back and see if it's going to act as support. In this case, they haven't. However, they have come back to the T-line. So gold, we have to watch tomorrow to see whether they're still taking it down back to one of these moving averages or whether they're going to do a little J-hook pattern and bring it back up. You say Gaddafi, the dollar? No, you can buy the dollar. You can be buying the dollar. That was gold. And corn had a very compelling chart. Here's your bearish Harami, right smack dab at the 200-day moving average. And every time they've tried to take it up, this is the reason I wanted to use this chart. If you were short and you saw this pattern, next day better open lower and trade lower. Well, it didn't. It opened positive. It started trading positive. So that'd been a good time to get out of the short position. However, when it came back down through the open, what's that pretty much telling you? That they weren't trying to keep it up above the T line. If you shorted, or if you shorted, you cover your short, then you re-short it at that point. John is asking, it is amazing how the moving averages act as support and resistance. My question is, why do they do that? What is the psychology that the moving average has that gives it the kind of power and influence? And then when the trend breaches the moving average, just saying the traders didn't care about the influence of the moving average. Except the moving average usually does influence everybody's decision making. For example, I have to go right to this one because that's the best example. Look what happened to BABA. BABA came up through the 50, and then what did it do? It pulled back and came right smack dab to the 50 and bounced back up. That had a kicker type signal the next day. What did that basically tell us? That once they breached the moving average, they came back to test it to see if it was going to act as support, and we could see immediately that they were. Not only support, but once they bounced up here, kicker signal told us there was going to be more upside, and where's our anticipated target? Wave 1, wave 3. Now, on the other hand, and I'm going to get to your answer here because that's a question that everybody should be aware of. But notice what happened and when it got to the 50-day moving average. They started selling it off. We had a bobble, and what's our kind of our criteria for a bobble? If you take your profits, and then they close it back up above the 50, you can be buying it back. It told us the 50 was not going to act as support. But however, notice what happened when they took it up strong on whatever day that was. Monday, Friday, Thursday. At the end of the day, which their earnings were coming out that afternoon, they were still selling it off, and they were still below the 50, which meant you shouldn't be getting in this. If you had gotten in, you should have gotten right back out. Then they did a belt hold, which told you if they had traded this positive coming up through the 50, that was the time to buy. However, where'd they open it? Right at the T line and took it down. So now what's this telling us? It's pretty much telling us that they were selling at the 50, and where's the next likely target? Back down to the trend channel, down in this area. Why is that a belt hold? Because a belt hold is where they take the price way out of the trading range, and they bring it back up into the trading range. And it's big enough that you can see that it was out of the trading range when they brought it back up. I'm trying to think of another belt hold that would be more compelling. But in this case, a belt hold would have needed to confirm with additional buying. So a belt hold is the Japanese rice trader's explanation for two sumo wrestlers fighting. One's trying to back out of the ring. The other one grabs his belt and pulls him back in. That usually starts a strong uptrend. And in this case, where it didn't, and are trading it down, it pretty much tells us that this downtrend, which had been started ever since it was at the 50, then they popped up right back to the 50, and they're selling it off. That's a good indication they're not going up. It doesn't have any strength yet. Where could they bring it? Back down to this level. So this becomes a good short. Would you consider it a belt hold even? Yes, a belt hold is still telling you they took out a, it's in the overbought condition, but it's still a belt hold. It's telling you that up here, they gapped it way down here, wiped out a lot of sellers, and the bulls stepped in. Doesn't matter where it's occurring, because a lot of times if this occurs here and they started back up, basically you're going to have a J-hook pattern. So it doesn't matter that it's in an overbought or oversold condition. A belt hold told you they wiped out a lot of sellers and the bulls stepped right back in again, which means there's less sellers in the way for the next move. And why was I here? Oh, because of your question. So here is the answer, that if you were an institution and you wanted to buy this stock and the buyers started stepping in, where do you think the first place everybody's going to want to sell or take their profits? When it hits the first major resistance level. And I'm trying to think of the opposite direction. I'll have to see if I can come across one. Yeah, the first target is the 50-day moving average. That's when everybody starts taking their profits. All we have what we have is the capability of seeing that they are taking profits here, but then they start buying again, failing in one more time, so they're taking it down. And I'll show, John, I'll get to the opposite of that with a better explanation of why the moving averages work as good support and resistance levels. So I won't forget. Yes, I will, but remind me. All right, so here's the reason we recommended ANFI today was, notice what it was doing once it was just waffling right here at the 50. Inverted hammer, then buy signals coming back up above the 50. So essentially what do we have is wave 1, wave 2, going into wave 3, which we could potentially make the 200-day moving average your next target, which is significant because if you can be buying here at 9 or 5.92 and it can go to $9, that's pretty close to a, I can figure this out, probably an 85% return, which is nothing to sneeze at. Remember, we were buying this one because of the little morning star type signal. And where did that occur? Oops. Right there. Nice breakout. And what did they do? Once they broke out, they gapped up, which told us there was a lot more upside to this one. Kind of the same analysis that we applied to the Amazon chart. This not a clean fry pan bottom, just kind of a choppy. But notice what happened also right here at the breakout level. They did a little kicker type signal. They were in an uptrend. They weren't closing below the T-line. They were doing a J-hook pattern. They've broken out, which basically tells me if this is wave 1, wave 3 is probably going to be up into the $620 range. On the daily chart, ANFI closed below the 50-day moving averages. Is that a concern? No, we're not buying the moving averages. We're buying the stocks, the price. We don't care that it's, what do we say? Closed below the 50-day moving average. It didn't close below the 50-day moving average on my chart. There's the 50-day moving average. Closed above the T-line and the 50. There is your negative belt hold. What was that on? When you make a comment, make sure you put the. I forget what the last one was. Was it Ha? Amazon. Oh, yeah, but that's not a belt hold. Remember what the definition of belt hold is. It gaps way above the trading range, and then they bring it back down into the trading range. In this case, it was more of a message, which would have been that if they started buying this from here, you want to start buying, because the message was they gapped it way up, took profits. After the profit taking was over, then it was heading higher. Rick, hold on to your Sal. Got to do each time you ask a question, tell me which ones you're referring to. Oh, this coming Thursday? All right. On Amazon, isn't that a double top? No, we haven't seen any selling yet. Remember, we want to see a sell signal confirmed. There isn't no, it could be a sell signal, but if they trade this one higher tomorrow, still in an uptrend. And this is the breakout on Weight Watchers today because Oprah is deciding to buy into the stock. So we had started buying some over here. Didn't close any out on Friday. Number one, because it wasn't real decisive below there. Number two, because I wasn't here. So we have a few positions or a few accounts that have a good profit in that one. And let's see. Oh, that's what I was illustrating. When HA broke out through this level, Amazon has broken out through this level. You might keep an eye on CALA. Nope, that wasn't it. CALM. As you can kind of see, it's broken out through this level with a nice strong signal, and there was something more compelling. Let me take a gander here. Oh. It kind of broke out through this level, and now it's broken out through this level. And how did they get there? They gapped through that level, so that means there's going to be more upside. All right, and so the SK, going back to John's answer question, why do the moving averages act as oh, okay. Oh, I forgot what I was saying. Oh, why do the moving averages act as magnets? Because if you were interested in this stock as an institution, you didn't know where to buy it, and you saw it moving back, where are you going to think about buying it? When you see if it acts as support at a support level. Why has this become a support level? Because every major money manager around the world uses the 50 and the 200 to make decisions about their portfolio. So even if you are a money manager, you're watching to see what all the other money managers are doing once it gets down here to this level. If they're buying, that means it's safe for you to step in and start buying. And I say start buying because if you're going in and buying 400,000 shares of a stock, you're probably going to be doing it in chunks of 5, 10, 20,000 at a time. It may take you 2 or 3 days or 4 days before you're going to get it executed. This one was more that ANFI was more that it came up through and then just kind of hugged the 50. But now we can see what type of pattern it's setting up. We know what the JPEG pattern looks like. That's right. Got to know what your indicators are telling you. And so on COM, no, not so much a 45 degree, because if this is a breakout of this magnitude coming out of a fry pan bottom type pattern, even though it's kind of choppy, you can still see it's a big fry pan bottom. You might have a very quick move up to the $80 area. Gig one, if you do enter this one, you're just a little bit more diligent to make sure it's, if I was buying this one tomorrow, I definitely would not want to see it traded all back below today's open. That would be too much selling pressure and bringing you back down into the trading channel. So if I was buying tomorrow, I'd probably want to see it stay above the 3T line for a little bit, as well as the T line. Recently you commented that on the pattern of buying in the morning. Yeah, that's usually what happens in the market conditions, or in the markets. They usually sell off in the morning and then bring it up in the afternoon or later part of the day. That's happened a couple of times. Here, it was Friday, they traded lower, then brought it up. Today they opened it, took it down, and brought it back up. But you can tell or have a good idea that they're going to bring it back up based upon what the other indexes are doing. For example, when they were selling the Dow off today, the NASDAQ was trading higher. So that gave you an immediate indication that this market wasn't turning over. It was just that one index was selling off, the other one is heading higher, the trend, and that usually means the existing trend is still in progress. Okay, let me get through a few of these, or we'll be here until the cows come home. Nugget, close that one out today, because where did this top out? Right about where it topped out before. This should have broken out on a fry pan bottom. It shouldn't trade back below the T line, which it was doing today. That was a good indication it was time to get back out of Nugget. So we know what the expectations are of a fry pan bottom, a very strong price move. We also know if they fail right here where the pattern began, you get out of the trade. All right. We'll tell it sometime, Cashew, when everybody's complaining that all I have is old jokes. But I kind of use them to illustrate that nothing ever changes in candlesticks. It's all the same. Or the jokes. So on VTL, this was a case too, that if they started trading this below the T line, more than likely it's going to be in the bobble. So you should have come out of the trade and just see if they come back to the T line and hold it. Then you buy it if it comes back up through the 50. Okay, now, here is an example of when do you get ready to take profits. There's your scoop pattern. Where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So anytime you're in the overbought area and you see a big move, get ready to take profits. You try to avoid the bobble. Mary, I usually come out just because of the risk-reward factor. The risk is, which one were we looking at on the bobble? Anyways, on a bobble, we know it's selling off. We know it's probably coming back to the T line, but we're not sure it's going to go support of the T line. So it's not usually going to be a very big difference with a VTL. Okay. So if you came out of the position and it came back to the T-line, just see what happens. But if it doesn't hold in the T-line and you're still hanging on to it to see if it's going to do a bobble, now you're out of it 2 or 3 days later. What do we know about the bobble? It's a high probability trade that once they hit the resistance level, they come back and test the T-line. Once they test the T-line and start back up, your probabilities become a lot greater that you can either be buying back in here at the 50 or above the 50. I don't mind closing out a position that I don't know which way it's going to go here and buying back here knowing which way it's probably going to go. Okay, all right. So let's see. Oops. All right, so here's the reason you want to know what's going to happen with your high probability trade setups. Big move, doji. If it opens positive, what type of pattern do we have? Probably a doji sandwich. And where do you think the doji sandwich is going to go? Well, if it's that magnitude, at least up here to the 50. So even if you're a day trader and you see that setup, and you see the stochastics coming up, and you see them starting to trade higher the next day, go ahead and buy, because the probabilities are the magnitude of this day is usually going to be the same magnitude as that day. And if you can see what the potential target is, at least you know what to do once it gets to that target. You flip to your 10-minute chart, see if that's where they're going to resist it. In this case on PGNX, they were trading positive after a doji sandwich type setup. It even went through the 50. So your 10-minute chart would have told you once you got to the 50, they were still heading higher. Kara, unknown token. Yeah. That was more of a doji on the other chart. I don't know. But Kara was an example where on the other charts it was a doji, but if it opened positive, where was it likely to go to? The next major moving average, the 20. And OME, there was your doji sandwich. Now, why was this doji sandwich important? Because notice where it told you the next big move was going to be. Right here at the beginning of this big fry pan bottom. So would that essentially tell us, with a doji sandwich, we can imply that there's going to be more upside. And if this is a fry pan bottom breakout and there's going to be more upside, what do you think the magnitude of our upside might be? Probably the same magnitude as this move right here, which looked like it was about 3 points. So that means that should take you up into about the $22 area. CNC, same scenario. Big day, doji, where do they almost take it to? Up to the 50. What do you do with one of these? You hang on, because usually there's more upside after a doji sandwich. And kite, when, who was it? Somebody sold off today. I forget who it was. Oh, it was Blue. But notice what happened with Kite. Kite sold off right back to the T-line and then came right back up again and broke out through here, J-hook pattern. There's probably more upside to Kite tomorrow. And ALDR, doji sandwich. Now here's another thing to always keep in mind. Whoops. See a bullish signal. You see a big up day. A lot of people say, well, isn't that a shooting star? Isn't it? A shooting star has to be up here. This is just starting. So you've got profit taking. Very simple. If it opens positive the next day and starts trading up, you want to buy it because that tells you the profit taking is over. This signal is still in progress. So we basically have a Morningstar signal, again, followed by a doji sandwich, which I have cleverly named a McMuffin because you got a Morningstar signal and a doji sandwich, or a morning sandwich. It's a McMuffin. And I think this was CMCM. There's your doji sandwich. And what did it tell us when it opened positive? With the doji right smack dab on the 50, that the 50 was not going to act as resistance. This day and this day were going to be the same. So you essentially have a T-line crunch, a doji sandwich, fry pan bottom type pattern. I would suspect your next target on this one is going to be up into the 200-day moving average. That's right, all day long. That's right. And I think I have one more that illustrates the doji sandwich. Yes, OCLU, Morningstar. There's your McMuffin. So this is an easy one. If it opens positive tomorrow, you want to be buying because they're probably bringing it back up to test this level, which would be a decent return. Okay, let's take a few, or look at a few that are looking good. There's your doji sandwich breakout of a fry pan bottom through the 50. Definitely want to be looking at this one tomorrow. That's KPTI. Now here's your J-hook pattern, your bobble, everything that would imply there's more upside. There's J-hook pattern, wave 2, wave 3. Where did wave 3 take you? Right smack dab to the 200. What type of signal did you have when you got up here? A hanging man. It was time to sell. Then what happened today? They couldn't close it below the T-line. You had a T-line crunch. You had a bobble. Then you had a kicker signal through that level. What's that pretty much telling you? The next wave is probably going to be this magnitude. You always wait for a close above the T-line before buying. No, if I can see that this is a kicker signal trading above everything, I'm buying as soon as I can see it, or as soon as I do see it. What was the other one? No, that wasn't it. There was one where it closed right on the T-line, or right on the, this one. This one closed right on the 50, and it opened positive the next, or started trading positive, pretty much telling me that they're going to have another day like this. So I'm buying pretty early because the probabilities are that you're going to go much higher. Let's see, Mario, I forgot to read your question before. After all the years you've been trading, is there ever intuition involved with your analysis of a particular stock along with the candlestick pattern? Sometimes it seems like there's some situations where it appears obvious by the patterns that a particular stock will go up or down, and then it does complete opposite. Or is there 20% of losses being a trader? Remember, Mario, everything we're analyzing is high probability situations, not high guarantee situations, high probability situations. I still go on the premise that every time I see a pattern or a signal that I recognize, and this is why we keep going over and over what the patterns look like, that I know that if I bought this one tomorrow, the probabilities are that I'd be heading in the right direction. But I also know that even if my probabilities are extremely strong, like 70% or greater, I also have to realize that 30% of the time there's a possibility it's not going to make money. So it used to be that when I decided to buy something, it was because I was smarter than everybody else. It should be going up. I at least now know that even if you have one of the best trading programs in the world or trading methods in the world, it's still going to be wrong 30% of the time. So that learning process is, if this doesn't work, what do I do? Get out of it immediately and go on to something else. Cut your losses short. This is that aspect that everybody tells you what to do, but they never tell you how to do it. Candlesticks basically tells you if this is our probabilities, we should be moving this direction. You probably shouldn't see it close more than halfway down this candle or trade back down to this level at all. It should be going positive. Henry, I usually have 100% of my funds invested at all times. Now, that doesn't necessarily mean it's 100% long or 100% short, but because of candlestick scanning, I'm always going to have way more opportunities than I have money to buy them all. So at that point, it just becomes a process of analyzing which ones have the best probabilities. And that's why we keep going through the left-right combos, the best friends, the doji sandwiches, because these are all pattern setups that tell us what human emotions are doing. They've done so consistently through the last 4 centuries, and they're going to be doing the same thing for the next 4 centuries. So we just have to identify which ones are the best ones to get in, knowing what probabilities we have being in the right direction, and also knowing that if it doesn't work, close it out and move on to something else quickly. So here's a nice big fry pan bottom, and how did this one break out? With another doji sandwich telling us, ooh, do that. Notice if this was wave 1, wave 3, this one should head up into about the 950, $10 range. I don't know what that is. Who keeps right? This was the that's why. This was the McMuffin. On Mankind, notice what we have here is kind of that Morningstar signal, then a doji sandwich or our McMuffin. And where did it occur? Breaking this downtrending channel. Where's our next first target to watch for? The 50-day moving average. So blue was selling off hard today, but then notice what it finally did at the end of the day. A long-legged doji, which makes it very simple. This one's going to move in the direction of how they open this one tomorrow, because they told you there was lots of indecision today. Now we'll see which way they're planning to take that indecision. Vegas trip was good, just kind of costly, which they always are. I have a hard time going into the casinos because I spend my whole life analyzing charts that tell me which ones have the probabilities in my favor. And it's hard to go sit down at a table where you know the probabilities are already against you. So I just play video poker most of the time. Along on the open, sometimes it's 2 minutes, sometimes it's 45 minutes, all depending on what the market is doing. Remember we went after ALEM the other day? There's your bobble. There's your left-right combo. I wouldn't be afraid to be buying this one on positive trading tomorrow. From here up to the next resistance level is approximately a 50% price move. So if you're an option trader, here's a $3 option that you don't have to worry about the time element to it. Wayfair, another fry pan bottom. There's your doji sandwich breaking out the J hook. You can stay long on this one. That's right. Brett, it all depends. There's some weeks where I make very good money in the options because the markets are moving well. And then there's some weeks that I make more money in the commodity area. So it's I trade both just because when one gets dull, which they all do, the other one, there's something else to go after. So there's another doji sandwich up through a resistance level, making the next target. This is MGNX, making the 200 the next likely target. DXCM, there's your kicker type signal. If this opens positive tomorrow, you want to buy immediately because essentially that tells you that you've got a double doji sandwich going. And if this day and this day are the same, that tells you they could probably take you right up to the 50-day moving average. See, CDZI. There's your best friend signal. Anytime you see that doji, hammer, gap up, where was your first target? The T-line. What did they tell us today? Maybe they're not going to worry about the T-line. So if this opens positive tomorrow, where's your next target? They're going to fill this gap, which means you're moving further away. There's still more buying. Then notice how big this downdraft was. Now they're starting to bring it back up. This is where you have the potential of what they call a column reversal, where they bring it back up here, and then bam, they take it right back up to where it was before. DV, yes. As this flurries start coming down, we're going to be going into more of how you set up some of your long-term picks. So, yes, I'll be glad to do that. Left-right combo on V-Built, or bullish engulfing anyways. This one you can be buying. ATMD. No, Pshaw. AFMD. This one pretty much told you what you've got going. There's your morning signal. There's your little scoop type pattern created by the Morningstar signal. A couple of days of consolidation, and where do they consolidate it to? Right back to the T-line. Positive trading. First target is the 50-day moving average. All the moving averages except for the T-line are simple moving averages, yes. And that's what every major money manager around the world has on their chart system, or their charts, is the 50, the 200, and the 20 simple day moving averages. MTRX, another biotech that after a whole series of dojis down here, they've told you which way they're taking it. They've got the good possibility of bringing up wave 1, wave 2, wave 3, the same magnitude as this, which was 25 points. 25 points from here takes you up to the $50 range. I guess it would be higher than that. $60 range. PCRX, another one that has done a doji sandwich. There's your McMuffin. Morningstar signal, doji sandwich. And again, they had a doji right smack dab on the T-line. It opens positive. What's it tell us about the T-line? The T-line is not going to act as resistance. Next target potential, right back up here to the 50, which is kind of where it was a support level. Now you see whether that acts as resistance. See, I think I did AMGN. Yeah, doji sandwich, bobble. This one's probably heading right up to the 200-day moving average. Given blues rebound today, do you think biotech is in favor? Well, you can see that on a lot of the biotech stocks. They're all doing bullish patterns, so I wouldn't be afraid to be buying biotechs. Here's TRVN, another one you can be buying on positive trading after your little doji Morningstar gap up signal. Wave 1, wave 2 going into wave 3. So a lot of the biotech started moving back up. So when the whole, oh, I hope that wasn't for me, Joe, again. When you see the whole sector moving up, that means everybody's decided that's what they're starting to buy again. Here's BTU, bullish engulfing, kind of a J-hook pattern. A lot of the oils are starting to pick up a little bit of steam. And BAK, J-hook pattern, and notice how this one got started with that kicker signal. Which one was the one that had done that? No. Darn, I put a star next to it. Well, Shuzbots. That one. All right. Kicker signal going into wave 3. That was ITRI. I knew I had it out there somewhere. Okay, on the other side of the coin, if you want to have some protection, there's lots of good-looking shorts still. And I say good-looking shorts, and when you can see there's a downtrend, and they keep hitting a resistance level, notice what Navistar did right at the resistance level. An evening star signal. Where do you think the next target is? Bottom of this trend channel. So when you can see something failing at the obvious resistance level, this is CRS, sold off big. Where's the next target? Right down here somewhere. So you could be shorting this one. Remember, the bigger the signal, the more compelling there's been a change of investor sentiment. Here's a wave 1, wave 2, wave 3 on VRX. Had a little kicker signal. Notice how choppy it was in here. Nothing that was real compelling signal until today. You had a kicker signal. That means if they start selling this off, notice where the bearish engulfing signal was. Right smack dab on the 50-day moving average. Where was the next target? You blasted right through the 200. Now you've got this consolidation. If this is a kicker signal, if they break this level, you're 270 points. 70 points from here would take you back down to 100. That one's get a little star on the for a short. CRR, it failed at the 50 at the same level that you had a downtrending resistance level. More than likely they're going to bring this down to at least this level or down to this level. What do you consider low volume? Usually I don't want to see less than 200,000 shares a day on a stock. If it's a higher price stock, it doesn't have to have as big a volume, obviously, because you're only going to be buying a few hundred shares at best, so you're not going to move the price around. Scotty failed at this level, failed at the 50. I would suspect at least coming back down and testing the lows, or wave 3 taking you down that magnitude. And TMST. This one you can be going short. Here's your next target down here, which gives you about a 60-70% move to the downside. And I'm pretty sure anything that I'm showing you on the short side has enough volume that you wouldn't have any problems getting in and out of it. So when would be going short on this one on weakness? Because you can see that the channel bottom right now is down here someplace. And that's also Impel, in that same industry. That's kind of your bearish belt hold. Now that's your bearish Harami. If this one starts selling off, look for it to come all the way back down into this area, another 50% move to the downside. And some of the oils were getting whacked. Murphy oil, downtrend, right about the same level as the 50. Now selling off. Where's your next target? Right down here at the bottom of the trend channel. And one more. Same scenario on CNX. You can see the trend channel. Here's your next target, down 50%. Las Vegas Sand, I think, yeah, it's getting there. The same thing. If this opened lower tomorrow, you're probably coming back down to test at least down here. Now notice what started the uptrend. Here's your kicker signal. Notice what ended your uptrend. A gap up doji, followed by, they did a kind of a belt hold yesterday, then sold it off again today. So that was your first warning. Whenever you see a gap up in the overbought condition, either one or two things are going to happen. That was breaking out through this level, or that was your exhaustion at the top. Once they brought it back down into it, they're back down in this range. That now tells me that was exhaustion. Okay, that's about all I have for tonight. Is there any general questions on candlesticks? And wait for your individual stocks until I tell Jim to do the double line. Hold on for a second. No, I had the sliding glass door open here in the office, and it was getting a little bit nippy in here. Okay. They report earnings on Wednesday. All right. You always talk about whether a stock is above, at, or below the T-line. Do you ever consider the angle of the T-line? No. Remember, we're not buying the T-line. The T-line is only telling you where the, I guess what I would call the psychological support and resistance. And I call it psychological in the sense that it's not something that everybody has on their charts. The T-line is, very few people have it on their charts. So it's not acting like a magnet like the other moving averages. So when it works so well, then you've got to kind of consider that it's a natural support and resistance level of human nature. So when you add that to the graphics of investor sentiment, and you have the support and resistance of human nature, you've got an extremely powerful combination to tell you whether you're in the right direction or not. The dumpling top, yes, is the opposite of a fry pan bottom. So a dumpling top, as we saw in the Dow, had this big rounded top and then the slam to the downside. That was somewhat what I thought would happen to Shake Shack, but not yet. Oops. Shake Shack had this kind of dumpling top, but now the signals tell us that instead of it slamming, when it got back down here to the support level, it's starting to show that there's support there. So instead of having a dumpling top breakdown, this looks more like it's setting up for a double bottom. Whereas since it has basically been doing a double doji. Well, a double doji sandwich is only a 4-day pattern. It's October. Now it's more your doji sandwich right here, not a double doji sandwich. But you can see where it's supporting down here. So I would be a buyer of this with the expectation. So a lot of people over the weekend said, would you ever use Fibonacci numbers? And the answer is I don't use Fibonacci's to make my decisions. I use Fibonacci's to see where I should be watching for potential reversals. So if I was buying this one after seeing this wave to the downside, I'd watch here, I'd watch here, and I'd watch here as well as the 50 to see if those were the spots that the selling, if there was any sell signals, then I knew that was where they were taking it to. Bruce, I think all the scans are set up for TradeStation. There's a package somewhere that you can get that does that for you. Does a long-legged doji have any significance in the length of the legs in itself, or does it need next day's trading for more meaning? No, the bigger, remember, anytime the bigger the signal, the more compelling. There's been a change of investor sentiment. So the bigger that signal is, the more compelling. Yeah, you don't know what's happening yet, but you know if they open it lower, that's what their decision was. If they open it higher, that's what their decision is. It's telling you to get ready for that big change of investor sentiment. You trade weekly or 60 minutes? No, I don't trade on the weeklies. I use the daily charts. I'm a swing trader, so usually I'm making my analysis based upon what the daily charts are doing. Now, the longer you hold a position, then you can start adding your weekly and your monthly charts to make that decision. Depending on where a shooting star occurs. No, I probably wouldn't have closed it out today because it's still right here. So it's a shooting star doji, which makes it very simple. If they open this lower tomorrow, you've got bearish confirmation and you're back into the trading range, you take profits. If it opens positive tomorrow, you've got the potential of a J-hook pattern break out of this level, bullish doji sandwich. If the cloud on blue, it could be. So anyways, it gives you an opportunity to know exactly which way it's going to go based upon what usually happens after a doji, especially a long-legged doji. They're usually going to move it in the direction of how they open it. ABTL, I don't think we did ABTL. Oh, because if you can take wave one, which was $4, and take wave wave three, let's see, was that $4? It was actually from 15 to 22, $7. So right about from here, another $7 would take you up into the $27 area. Do you keep buying based on candles even though overbought conditions? You can be buying patterns on overbought conditions. You want to buy the signals in oversold conditions. You can buy the patterns. Whoops, that's not what I wanted. You can see on the pattern like this where you have a fry pan bottom, when they break it out, notice where your stochastics were. They were just climbing up into the overbought area. So always keep that in mind, that you're buying the signals when your stochastics are down in the oversold area. You can buy pattern breakouts when they're up in the overbought area. ANTH has a double doji sandwich. Potential setup, yes. This one, if it opened positive tomorrow, you can be buying immediately because they've taken it up. Double doji sandwich, if they open up positive, they're going to take it up again. Gig one, TOS has all, I think TOS has the scans on there. And if you're in the room, if you see EDC usually has all the formulas for all the softwares. If you're trading a 10-minute chart, would you use a 1-hour charts for confirmation? No, I usually use my 10-minute chart for confirmation. Right now, I'm short crude oil. But during the day, I use the 10-minute chart to tell me when it's time to get out, when it's time to get back in. So sometimes, so you can see on a 10-minute chart that even though there's buys, that we could see there was a downward trend channel. It broke it over here, but that was right at the end of the day. I usually don't care about what happens at the end of the day because at the end of the day, your pattern is already pretty much in place. So this is an illustration that you saw how it was moving up at the end of the day where they'd already, that was after what they call the outcry trading. So the actual chart would have had a tail down here and closed right about here. So yeah, I don't. Now it depends on what you're trading. When you're trading the dollar, which is very slow or much slower moving, yeah, you might use a 15-minute hourly chart to tell you that the wave is still in progress. Where do you find the morning reports that usually determine which way the market is going for the day? Ron, if you have CNBC on or Bloomberg, they usually have little bugs or little indicators showing what the pre-market futures are doing. Or even on, I can get it on here, even on TOS. Oops, didn't go all the way over. Let me move it. Even on TOS, I have the YMs. So that's telling me right now, and it doesn't matter what it's doing right now, because it's going to be completely different by the time the market's open tomorrow. But about anywhere from 5, 10, 15 minutes before the market opens, if you can see that the pre-market futures on the Dow are down 140, you pretty much know they're opening things lower and get ready to sell things that are confirming their sell signals. As an options trader, how do I trade crude oil directly, not an ETF? The crude oil that I'm trading on here is the actual futures contract. It's the December, I think it's the December contract. As an options trader, you can trade the options, I think, on the indexes. This is the U.S. oil funds. So I think you can buy and sell options against that. Okay. Oh, and let's see. How do you use the 1 minute, 10-minute, or 10-minute, 3-minute, 1-minute combo? Oh, I used to use it for the trading the E-minis. Right now, I use the The 10-minute, 5-minute, 1-minute combination trading commodities. Let me see if I can pick something that would illustrate that. Let's say I wanted to short soybeans today. And it opened lower, and then it traded down through the T line, which meant it was coming back to the 50. Well, I want to make sure on the time frame that we're looking at that, let's say right here, I decided I would short. So I don't know whether they're bringing it down and bouncing it back up or whether they're still taking it down. So once I see the 10-minute chart starting to turn, then I flip to the 5-minute chart, which might show me up. They are doing a bearish engulfing. So if I'm ready to sell or go short, then I flip to my 1-minute chart to make sure that the 1-minute chart looks something like this, and it's probably way over here. But what I don't want to see, if I'm ready to go short, I don't want to see the 1-minute chart doing this, because that tells me the 1-minute chart is starting up, which means my 5-minute chart might not be coming down very strong, getting ready to go back up, which also means my 10-minute chart may be turning around and heading back up. So I just kind of use all three in conjunction with each other to make sure that whatever my trade I'm about ready to put on is still moving in the right direction, that I'm not catching it just as it's turning and going the other way. Okay, with that, Jim, go ahead and do the double line. And in 3.8 seconds, go ahead and do the next double line. All right, let's see. Now I've got to find out where, there it is. Would you win? Let's get back to the. Win. Would you expect support at the previous upper trend channel line rather than down to a new low? Would you expect support at a previous upper trend channel line? Like here? Well, could, but that would also looks like it kind of almost coincides with the 20-day moving average. Try to see if there's any other support line. So the whole analysis of this one is we're in a downtrend. They popped it up to the 50. More, I would, if it breaks this level, which I would suspect if they open it lower, it's telling us they're taking it down. But remember, there's a gap to fill here. Everybody asks, well, don't gaps get filled? They do. It might not be filled on this move, but when this move is over, it might be filled on this move on the way back down. So I'm staying long as they don't see a sell signal on the way up. And then I know at least I have a target if I'm heading back down that might be this area. And then what do you suspect could be the downtrend? Well, there's kind of a channel, or this channel right here, telling us they could bring it all the way down into this range. FCX, another one that you can get ready to go short because you've had your kind of your evening star signal, but then you had your left-right combo. Let's make this big enough where we can see it. Your left-right combo. Now if it opens lower, you've essentially got a bearish doji sandwich, which means if this day and this day are the same, look for it to at least test the 20-day moving average. SBGL, left-right combo confirming. If it opens weaker tomorrow, you'll know at least it's coming back down to test the T-line. Once, just stay long. Now here's a case where this wasn't a it wasn't a bearish belt hold, but it told you that if they were taking it back up, you look for the next buy signal. There was no buy signal yet. There's no buy signal yet. A bullish Harami. There's your buy signal. That's telling you the buyers are starting to step back in. And PLD, J-hook pattern. Where did the J-hook pattern start? There's kind of your bobble, got through the 200. One day below it, back up again, doji sandwich breakout. Where is it breaking out? Right here. What's the doji sandwich tell us? Not the doji sandwich, but the J-hook pattern tell us? If this wave and this wave are the same, I would suspect at least coming back up to the top of the trend channel somewhere in this area. That's a good looking chart. I'm putting a little star with my crayon next to that one. ExxonMobil, I would suspect, notice what they did when they got up here in the overbought area. They gapped up and did a hanging man. Then they opened it lower. I would think they're at least bringing it back to this level. Then you have to see whether that level will hold. The SPY, just stay long on this one right now, where they supported it right here off the T-line, J-hook pattern. I'd still suspect they're going for the 200-day moving average. RPTP, nothing here to get excited about. If I was going to be buying this one, I'd put a buy stop above yesterday or Friday's open. When it comes up through there after the Morningstar signal, that tells me the bulls are still there. Look for it to come up to this level, which would probably coincide with the 50-day moving average. And ACAD, it has to open positive. If this opens lower, you can see the wedge formation. Needs to open positive to do a double doji sandwich. CANF, you don't want to be in this one. There's nothing anymore. That had the potential of a J-hook type pattern that disappeared. You shouldn't be in this one at all. LB has been staying above the T-line ever since the scoop pattern. Stay long until you see a sell signal and a close back below the T-line. ITCI came up nicely today. This one we bought some stock. The options were too expensive, so we've left the options alone. I would still be a buyer of this one on a positive open tomorrow. Let's see, forgot to do the biggies. Apple, I wouldn't be long or short. There's nothing going on there. Netflix, I wouldn't be a buyer of this one yet until they can get back up above the T-line, because you've got a lot of resistance. You got all the moving averages right in here. You've got a bullish engulfing signal, but notice your stochastics aren't anywhere near the overbought area. If you were short, you probably should have covered it with it trading back up above the high of yesterday's doji, but I'd just be ready to re-short it if it opens weaker tomorrow. That was Netflix. Let's see, we did Amazon. Amazon, you stay long. Another one that I would also probably use today's low as a stop. If it came down through there, you got some profit taking going on. Tesla, you can get ready to buy. You've got your bullish engulfing after a piercing signal, gap up. If this opens positive, you can be buying. Just be very careful when it gets to the 200. Make sure it can break out through there. DSW. This one you can be buying. Just be aware you've got a downtrending channel in here, so once it gets up toward the 50, that's where you watch to see if a sell signal occurs. DR or DWR, yes, that's still bearish. First you'd watch this level, and you'd watch this level, this wave right here. So if you're short, it's probably not the best short at you can still short it. Probably not the best short in the world because of the trajectory kind of slowing down or not going down real strong right now. But I wouldn't be afraid to short it. You had the gap up, wave 3. Look for a 45 degree to come off of here. Just stay long on this one. What is that? GLNG, the transportation. You can see the trend channel. See it closed right on the T line. If it opens lower, you close it out. It needs to open positive and trade positive to tell you they're coming up to the top of the trend channel, or at least the 50. If it opens lower, it kind of breaks that trajectory of a possible J-hook pattern. Southwest, stay long on this one, especially if they open this positive tomorrow. Your wave 1, wave 2, going into wave 3. VIPs. Whoops, I skipped a few, didn't I? Oh, hold on, Big Al, I'll get yours. Another one that you can be buying based on the J-hook type pattern. Probably more likely you're up in a uptrending channel. Micron, you stay long, and you can be buying this one if it comes up through this level tomorrow with the anticipation that wave 1, wave 2, bullish engulfing right off the T-line, taking into wave 3. This move right here and this move right here could potentially bring you up toward the 200-day moving average. CSX, this one I'd be more apt to go short tomorrow on a weaker open after your bearish engulfing signal right here at the T-line and the 50. Bearish doji sandwich. First, you have to watch to see if it breaks through this level. If it does, see if it's going back to the bottom of the trend channel, which means they'd sell it off. CSX, got to also remember, doesn't have a very big trading range. Okay, we did those. Let's see, BABA, I suspect is going up to the 200. We had that little kicker type breakout to the upside. Etsy, nothing yet. If you were short, you're in the oversold area, you're starting to see dojis, I'd put a buy stop right about here, that if it came up positive tomorrow, I'd close it out. Otherwise, if it opens lower, you stay short. ATVI, another one that if they open it lower, they're just coming back to test the T-line. You can close it out and see what it does once it gets to the T-line. If it opens positive, tells you your uptrending channel is still in progress. Honeywell, you get ready to short this one if it opens weaker. Notice it failed right at the 200 like it did before. Came down through the 50, came up through the 50 and failed again. Little consolidation today, but if they open this one lower tomorrow, you can be shorting it. Just be aware that Honeywell doesn't have a real big magnitude of movement either, being an institutional trader. But I would be short in it if it opens weaker. Dana Holdings, nothing to get real excited about here. I probably first of all want to see if it's going to do a J-hook pattern. If it does, that tells me it's going to break out through this level. So if you're buying on positive trading tomorrow, just don't let it close back below the T-line. If you're more conservative, you can buy this once it comes up through the tops. See, we did Tesla, Mobley. Mobley, nothing here yet either. Probably wouldn't be long or short this one right now. There's just no direction to it. Your stochastics are rolling over, but you've got a lot of support in here and no direction. Whiting, probably backing and filling back to the 50. See what it does once it gets there. Silver Wheaton, this is why when you see a signal, use the very simple stop loss that the Japanese rice traders tell us. But if this was the candle telling us the bulls were taking control, they confirmed it the next day. If they could close below the halfway point of the candle that told us the bulls were in control, the bears are in control. Close it back out. First of all, it's telling you there's not going to be a strong trajectory. And two, there's a possibility that if they didn't hold the T line, it was going down further. And Gold Corp, this one, when it opened weaker after the bearish Harami, told you right where they were probably taking it to, back down to the T line. ECL, Doji gap down. This one you can be shorting with the prospect that they could bring it all the way back down, or at least back down to fill the gap. Anytime you see that Doji gap down, especially down through the T line, tells you there's been a very strong change of investor sentiment. SUM, stay short. If this would have been a case where if I was short and I'd closed it out as it was trading higher, I would have reshorted it or get ready to reshort it on weakness tomorrow. And if it does start trading weaker tomorrow, where's my target? The bottom of the trend channel down here, about a 30 or 20% move. Apollo. This one I probably wouldn't be long or short. This one is the typical one. Where do you think they're going to take it to? If you're an institutional trader ready to buy this and it's drifting, where do you think they're going to watch to see if it supports? Right at the bottom of the trend channel or right smack dab on the 200. So I wouldn't be long. I probably wouldn't even be short. Well, yeah, this would be a hard one to short. I'd probably just watch it until it got to the 200-day moving average and see what they do with it there. CELG, there's your doji sandwich. It needs to open positive to confirm the doji sandwich, telling you the 50 is not acting as resistance, and this resistance level is not acting as resistance. So this one you can get ready to buy on positive trading tomorrow. GRMN. That's getting ready. I say getting ready. Where do most people sell? They panic sell at the bottom. Now, if it opens positive, you can be buying because you have a bullish engulfing, doji sandwich potential. But if you're buying on positive trading tomorrow, which way do you expect it to be going? This direction. That means if they start taking it up, you don't want to see them bring it back down through the low of today. You get right back out. That tells you there wasn't the buying pressure that we were expecting. Tango, stay long on this one. Coming out of that scoop pattern, and notice when they sold it off today, they basically used the T-line as support. And that's where I keep illustrating. It used the T-line as support, a T-line or a indicator that nobody has on their charts. So that's usually just a natural support level. SanDisk got the shooting star gap up in the overbought condition, and it doesn't look like it's doing it at any resistance level. So this would tell me that if they open this one lower tomorrow, you take profits because they're going to come down and test the 200 to see if it's going to act as support. WTW, if it opens positive tomorrow, expect a 45 degree off of here. Visa, just stay long. Ever since your left-right combo scoop type pattern off the 200. So this is a perfect example of why the moving averages work. I mean, this is an institutional trader. You had a bullish Harami right smack dab on the 200. We know what the bullish Harami tells us, that the selling has stopped. That means if you start seeing buying from here, your scoop pattern's in effect, which it is in this one, with the slingshot effect to the upside. See, we did VTL, we did Babo, I think we did Shake Shack. But Shake Shack is looking like it's trying to do a double bottom. So you could be buying this one on positive trading. Just realize there's this little short-term downtrend, and it definitely needs to get through the 50. Newmont, get ready to short this one on weakness. Notice that you really didn't have any sell signals over here. They took it back up, and then you had your sell signal, which was a left-right combo closing below the T-line. I would suspect they're bringing it back down toward the 50. SOL, I would suspect they're going to bring this back down to see if the 200 is going to act as support. So if this opened lower tomorrow, if you're trading it, you close it out. Then you see if it comes back to the 200 and see what it does once it gets back to the 200. When Shooting Star, kind of right in this range. If this one opened weaker tomorrow, you close it out and see if it supports in this area. Chipotle, right now, after your Shooting Star, lower open, close below the T-line, I wouldn't be in it. I probably wouldn't short it until it breaks this support level. So that means if I was going to go short, I'd probably use today's low as my stop. If it came down through there, that means they're bringing it back to the 200. But right now, as you can see, it's in a sideways mode, so it would have to break this channel to tell you either to go long or go short. Boeing's doing that little J-hook pattern. This one you can be buying. It's not a very prolific mover because of its being an institutional trader, but I would suspect the next target right now is the 200-day moving average. Helen of Troy, a J-hook pattern in progress. You can be buying this one on positive trading. Keurig, nothing here. Wouldn't be long or short. You're in a sideways wedge. I wouldn't buy it until it breaks out through 57.50. I wouldn't short it until it breaks down. If it came back down through today's low, I'd be shorting it because it would tell me that the bottom of this channel is broken. And TSL has already used the 200 as a stop. I would stay long on this one. Just don't let it close back below the T-line. Skechers, nice little J-hook scoop type pattern, and it gapped up today through the 50 and through this downtrending channel. That one you can be a buyer. That's a good strong chart. Phillips 66, notice where they topped this out twice already, the third time. They've done it with an evening star. I would be closing this one out on weakness tomorrow. The AEM, or Ralph shorting that one on weakness tomorrow. AEM, get ready to close this one out on weaker trading tomorrow. Had kind of a kicker signal. It's not a true kicker signal. But the fact they close it below the T-line after the gap down and trading it lower, if they break this little channel right here, they're bringing it at least back to the 20. FCX, okay, they got earnings. What told you the options? And because you couldn't make sense of any one of them. I was looking at the 45s, and they were trading at, I couldn't even buy them. They were bidding $3, asking $4.80. I put a bid in at $3.90 halfway. That made me the bidder. Then they moved it up to $4 bid, $4.80. So I moved my bid up to 420. That became the bid. Still nobody hit me. So I figure if you moved it up, you're on the bid side and you're there for 5 minutes or so, either there's not enough volume in the stock or they're not going to let you have or not enough volume in the options, or they're not going to let you have any. So I pulled my bid and then I was going to do the 50s. Now, the 45s, man, if I was paying close to $5, it'd have to move here just to break even. Now, that's not a bad probability, but that's still a big move just to get back to break even. And you only had a couple weeks, whatever, 3 weeks, 4 weeks till expiration. So the price reward resistance, or the risk reward factor, wasn't all that great. So I went to the 50s. They were asking 210, bidding 210, asking 310 or something. So to even do it at 3 or 250 or 260, man, it had to move up to 5250 just to break even. So what I finally did is I bought the 45s, sold the 50s. I paid $1.85. That basically tells me if it just moves up to here, that my $1.85 now moves to $5. That seemed like the most reasonable one without having a lot of exposure. Win question. Looking at the upper trend channel starting August 10th, 17 support this line, so this support at 55 versus the 49. Take a look. August 10. September 19. Oh. Oh, no. To me, when I do a trend channel, if this is the channel, I'm looking at the bottom of the channel because that's going to be where the support is. So they'd probably bring it back to support with much more confidence or much more probability than bringing it to the top. So again, what are we looking at on an overall chart on this one? You're in a downtrend. They could bring it back down into that downtrend. So that would take you down into this area. LNG, here's a case where you can see when the selling took you back down to this support level. When you got to this support level, got a hammer signal. Not quite in the oversold area, but it still gives you a good impression of what will happen after this hammer doji. They'll probably move it in the direction of how they open it tomorrow. CBI, Chicago Bridge, nothing here. If you go short on this one, they could do a doji sandwich that brings you right back down to this level very quickly. And Disney, close at 109, above all moving averages today, 121. It could come back up here, yes. Right now, notice how Disney reversed with the bullish Rami gap up. Now, you're in the overbought area, but you do have a doji sandwich, which implies more upside. So there is the prospects. If I own this one right now, I'd stay long, but I'd use today's open as my stop. It shouldn't come back down through that level. My comments out of view. All right. Okay, CMG reports tomorrow. All right. Okay, as we can see, there's still lots of good-looking charts out there. J-hook pattern and PLD. a bobble on ALIM if you like the $3 stocks. Wayfair, fry pan bottom. DSQR, Doji sandwich, breakout of a fry pan bottom. We did Skechers. Another little fry pan bottom. They gapped up through the 50. So if you buy this one on positive trading tomorrow, it's breaking out through this downtrending channel. Oh, okay, yeah. I don't know what I'll do that. Let's see. Ah, there it is. Had an extra on there somehow. So there you go. All right. That's right. A purple ice failure. Okay, that's it for the night. Kept you way past your bedtime. We'll see everybody bright and early in the morning. We'll see you then.